Today we will cover this registration of charge, which is chapter 6 of ICR material. And this chapter is again a very small chapter like your payment of dividends, but the kind of questions that are being asked are, when compared to other chapters, they are fairly easy to handle. Now, before I start this chapter, let's look at what kind of weightage and how many marks the questions are asked in the previous year examinations. Now, if we look at as per the revised new syllabus of ICI for May 2024 and onwards, this chapter comes in this section 2 of this modules, and in this section 2, all this 3, 5, 6, 7, the 3 chapters covering about 20 to 30%. So on an average, even if we look at it, this is the previous year marks distribution that is being asked. Now, generally, if you look at it, you can say the average is 5. There are attempts where he is asked for 6, and there are attempts even where he is asked for just 2 marks. But on an average, you can expect roughly around 5 marks. Now, if you look at it, the November 2023, no question has been asked out of this, out of 70 marks questions. So, therefore, considering that one attempt, there were the immediate previous attempt, there were no questions being asked, it is better you all prepare for it for a 5 marks question. Again, I repeat, the chapter is very simple chapter, nothing to worry. It is the range of sections are hardly 10 or 11, which are, and the sections apart from the number being less, they are not at all complicated. So let's begin with what is this concept, and while covering this concept, we will also have a look at the previous year question, so that our revision of this chapter will cover not only this chapter perspective, but also from the examinations perspective. Now, let's begin with the objective first. See, the whole purpose of this chapter is to provide a kind of security to the creditor, that is to the lender. Now, generally what was happening, the kind of frauds, if we analyze, even when it comes from a banker's perspective or a lender's perspective, wherever the loans are secured, the borrower is giving his asset for a security, and at a later point of time, the secured asset, that is the asset which is given as a security, is being sold without the knowledge of the lender, either sold or transferred or dismantled, whatever it is, which is causing a loss of right to the creditor. So to prevent those kind of frauds and to secure the creditor from this type of frauds that a borrowers are involving, that is where this concept of registration of charges come up. Now, let's begin with the charge. If you look at the definitional section 216 of this Companies Act, a charge has been defined as an interest or a lien. So it is basically either an interest or a lien, and we are creating it on the property or assets, either of the company or any of its undertakings, and the main purpose of this creating interest is only as a security. So this is the prime word. So we are creating that interest not for any other transfer or assignment or etc. The whole purpose of this is to create that interest or lien for as a security. And whenever we are covering this charge concept, the definition of charge, it says it includes mortgage. Now, for your comfort, first let us analyze what are all the types of securities and for which type of securities this concept of this chapter of registration of charge is applicable, etc. Now, if we generally analyze, there are 3 types of securities: hypothecation, mortgage, and pledge. Now, as we all are aware, this hypothecation, basically where you hypothecate your stocks, you hypothecate your vehicle, all the vehicle loans, etc., all these movable assets, that is all getting covered over here. So under hypothecation, the asset, the movable asset is kept as a security. Like you take best example as a vehicle. Now, whenever you are taking vehicle loan, you are hypothecating the vehicle with the lender, with the banker or the creditor, whoever is funding for that vehicle. But it is the borrower who would be using the vehicle. So if we analyze from the physical custody of security from each of the securities, in the case of hypothecation, the secured asset, that is the asset which is given as a security, is under the physical custody of the borrower. Similarly, even under mortgage, this hypothecation and mortgage almost operates in the same model as far as the physical custody is concerned. The only difference is this hypothecation is for movable assets, say, whereas this mortgage is for immovable, like buildings, etc. So that is where this concept of immovable would come in. So this is for immovable, this is for movable. But the commonality between them is, despite that asset being given as a security, the physical custody of the asset or the secured asset is still with the borrower. So the lender is at high risk here, because since the custody is with the borrower, what happens if he damages the property? What happens if he is selling this property to somebody else? That is where this charges of registration would come in. That is why we say for these two cases of your hypothecation and mortgage, we say that this concept of this registration of charge is very much relevant for these two cases. But if you look at the other mode, that is the pledge, the third type of security, under pledge, which is commonly called as a pawnbrokers, etc., in a common parlance. Now, under pledge, as we all are aware, the physical custody of the asset is with the lender. So, since the asset is with the lender, there is no threat of losing the right on this asset. In this case, because the physical custody is with the lender, the security is very much there for the secured asset. So therefore, he is not in need of any additional security. So therefore, the provisions of this chapter are not applicable to this pledge concept of it. So to sum it up, this concept of registration of charge is applicable for hypothecation and it is applicable for mortgage as well. But it is not applicable for pledge for the simple reason the lender is having the complete control on the asset being secured. So therefore, we can say that whenever coming back to it, whenever you are defining the charge, it includes mortgage. This is fine. But from examination, he may ask you, are these concepts applicable to pledge as well? So these are not applicable to pledge for the logics that I've explained to you. Now, let's move on to section 77. Now, the 77 says, whose duty it is to create the charge and whose duty it is to register the charge. Now, according to section 77, this section from examination perspective is the most important section. Now, when we are analyzing what are the duties of this, who has to register. Now, if we read here, it shall be the duty of the company. So here, before I get into it, there are two parties that are involved in this registration of charges. One is company and the another one is the charge holder. So charge holder. So this charge holder is nothing but the lender in our common parlance. He is called the lender. And the company here we are assuming to be the borrower. So first we need to be clear with this terminology, because he will keep using the word, very rarely he will use the word lender, he will keep using the word charge holder, because he is holding the charge on that asset. So that is how the word comes in over here. But for our understanding, wherever you are using the word charge holder, you have to assume this lender in the background. Now, so coming back to it, it is the duty of the company. So when he says duty of the company, it is the duty of the borrower. Now, who is creating the charge? Within or outside India, either it's a property or an asset, either it is tangible or otherwise, that is intangible, situated in India or outside India. So once you are a company, that is a company registered under Companies Act of India, Companies Act 2013, then any kind of charge that you are creating, whether on a property or any assets or any undertakings, wherever you create the charge, within India or outside the India, and whatever may be the type of assets, tangible or intangible, it covers everything, every type of creating a charge. Now, wherever you have created a charge, that is where you got an obligation to register the charge. So to understand this, basically, we need to look into these two terms first. One is creation of charge, second one is registration of charge. Creation of charge is nothing but the borrower entering into an agreement with the lender. So, under this, the parties that are involved are the borrower and the lender, or you can call it creditor. So, these are the two people, or come using our technical language here is the charge holder. So, when you talk about creating the charge, in this, there are only two parties who are involved. One is the borrower and the second one is the lender. You can call him as a creditor or a charge holder, whatever the names. But when it comes to registering the charge, whatever the charge you have created, you are going to register with this ROC. So here there are three parties. One is your borrower, second one is the lender, and third one is the ROC. So all three characters would come into the picture here, whereas there are only two parties. So by logic and whatever you have understood, this creation of charge comes first. You create the charge, and whatever the charge you have created, you are going to register the charge. And with whom do you register? You are going to register with this ROC. So this is what here he is trying to say. Now let's come back to this. So whichever the company that is creating the charge, this is our point number one, and that company has an obligation to register these particulars with the ROC. So that is what is this background behind this 77. Now, from examination perspective, by analyzing these two, there are very few occasions, but he is also asking you about the definition of charge. So it can come for either your MCQs or short answer questions. So those are the two possibilities. Even otherwise, wherever he is asking 4 marks or 5 marks question, he is starting with what do you mean by charge, and then he will get into the tile question. So where it may be the marks awarded are generally 1 or something. So therefore it is important to learn this definition. So wherever you are creating any interest or a lien on any property or an asset, either of the company or any of its undertakings or a combination of it as a security, and which may include this mortgage. Now if you look at the question, this is what is the MCQ that is being asked in your MCQ booklet, which is issued by ICAI, so of 2022 series. It's very simple, it's a fairly straight MCQ. Any interest or lien created on the property or assets of a company or any of its undertakings or both as a security is known as the charge. So this is not very complicated, it doesn't require too much of a discussion, but he is asking questions on what do you mean by the charge. So just make 1 star to it and read it for the purpose of this MCQs or short answer questions. Now then we have discussed about this companies. Now moving further, whenever you are filing these charges, whenever you are registering these details by filing these documents with the ROC, what is the flow? So what are the documents that we are filing? So that is what he gets into it. So he says there are two e-forms that are to be filed. One is either CHG1 or CHG9, either of it, depending on what is the borrower. Is it in the nature of debentures here or for other than debentures? Now this entire concept, if you look at it, how does this operate? Let us try to understand this through this diagram. It is the company which will have to file with the ROC. We are talking about not the creation of charge, we are talking about the second one, registration of charge. The company has already created the charge. After creating the charge, you need to register the charge. So for the purpose of registration, you are going to file two documents. So one, either CHG1 or CHG9. In case your borrowers are a combination, then you have to file both the documents. See, again to repeat it, CHG9 you use it for if the borrower or if the loan is in the form of a debenture, if the money borrowed is transacted between them is in the form of debentures. Other than debentures, it is CHG1. Because in the case of debentures, the lender details are going to be many in number. So therefore, the particulars that you are giving obviously are going to be different between these. Let's not get into the practical side of it. Now let's cover from the examination perspective. So to repeat it, it is the company after creating the charge, they will file with the ROC either CHG1 or CHG9 in case they are involved in both the transactions, then both of it. So, and once they file this document with the ROC, then ROC will go through and compare this with the other particulars. So, that is this loan agreement or any description of the property proof. So, you are going to file two things with the ROC. One is the CHG1 or 9, and second one is the further supporting documents of it, like loan agreement, as I said, the description of property or the proof of property, the ownership of property. Once you submit these two documents, then if ROC will go through it and is convinced with the correctness of these documents, then he will issue a certificate which is called certification of registration of charge, and the format of this is CHG2. And whom does this ROC issue this? ROC issues one to the company and one copy to the charge holder. As I told you earlier, there are two parties in this entire concept, company and the charge holder. So CHG1 or CHG9 is filed by company to ROC along with this other supporting documents, and once these are validated by ROC, if he is convinced and if he is satisfied, he will issue to each of these parties one certificate which we call it as certificate of registration of charge. Now, and when it comes to the format of it, it is CHG2. Then this portion, who has to sign these forms, be it CHG1 or CHG9? It will be signed by both the people, the company and the charge holder. So both the people will sign this document and file it with the ROC, and ROC will issue CHG2 with that. So the same process is what is being talked about here. That is, particulars of charges to be filed with the ROC shall be signed by company and the charge holder. And the forms that we are going to use, basically the e-forms, since it's all 100% digitalized. Now, there are two forms that we file. One is the CHG1, CHG9, but these forms are for different purposes. This is for debentures and this is for other than debentures. Now, let's move on to this another important topic, time limits. Now, when I have to register the charge, because the whole objective is to provide a kind of security to the creditor. The government do not want a long delays in between creating the charge and registering the charge. If the gap is too far, that is when the frauds can happen. The borrower, despite entering into an agreement, he might sell the property to a third party, whereby both the third party as well as the lender could be at risk. So to prevent it, they want all these charges to be registered as early as possible. Now, if you look at it, the timelines earlier, that is before, like you can see here, before this cutoff date of 2nd November 2018 were different. There it was, they were allowing even up to 300 days, which is too long. So they realized that the gap is too long. That is when the possibility of frauds are very high. So therefore, these are the revised timelines for you. To cut it short and to come back, and from exam perspective, these are the timelines probably which you have to remember for the sake of examination. Now, what are the dates? Within what date we have to register? Now, if you look at it, the first slab is within 30 days of creation. This is what we learn it. We call it technically as the first statutory period. So first statutory period is 30 days, and the 30 days starts from the date of creation. And then whenever you want to file these documents, you may have to pay the nominal fee, so which is the normal fee. Then in case for any reason within this 30 days, if the charge is not registered, the required forms are not filed with them, for whatever may be the reason for the delay, then what happens? Then the second statutory period, if we see, the act says within a period of 60 days. But is it next to 60 days? No, it is not next 60 days. 60 days again is starting from the date of creation, which whereby this 30 days are already subsumed in this. So therefore, for a better understanding, this is your first statutory period, and this is you can learn it like either 60 days from the date of creation or further 30 days. So first 30 days, and they are giving you in a second statutory time another 30 days, because the 60 days again, the beginning point, the starting point is date of creation. Now, But for this delay, because you are filing it under second statutory limit, then you have to pay normal fee. And apart from that, because of that delay in filing it up to 30 days, you are supposed to file this additional fee. So normal fee up to 30 days and up to 60 days. That is for the further delay of 30 days, you are going to file additional fees. What happens if a company misses both the deadlines? They miss the first statutory deadline and they missed even the second one as well. Then they are given, here it is very clear, focus on the word, they are talking about further 60 days. So since they have used the word further 60 days, this is the first statutory period, this is the second statutory period, and this is the further. So if we add up all this, it comes to 120 days from the date of creation. Now, what fees they have to pay here? Normal fee, additional fee, and ad valorem fee. You are aware, ad valorem is nothing but based on the value. So, as a summary, just look at it. There are three numbers that you have to remember and three types of fees. Up to 30 days, you just pay the normal fees. And if you miss that first statutory deadline, then the second one, where they will give you 60 days from the date of creation or additional 30 days, incremental 30 days, you have to pay not only normal fee but also additional fee. But if you are, for any reason you are missing both the deadlines, then you are given further 60 days to file with this, whereby you have to pay as a token penalty this ad valorem fee as well. So in the third scenario, you will be paying not only normal fees and additional fees, but ad valorem fee as well. So these are the timelines which are important for you to remember. Now, let us look at, as I said, let's keep covering the questions that are being asked against the concept so that you get firm hold on the what is the concept that is being discussed all about. Now this one is there both in MCQ booklet as well as your ICI material. Now let's look at it. A charge was created by Cygnus Software Limited on its office premises to secure a term loan of 1 crore availed from Next Gen Commercial Bank Limited. So he is the lender. So since he is the lender, we call him as a charge holder through an instrument of charge executed by both parties on 16th February. So 16th February is the date of creating a charge. So this is the date of creation of a charge. As I said, creation of a charge is different and registration of charge is different. So this date is the creation of charge. Then inadvertently, the company could not get the charge registered with the concerned ROC. So this has not happened. The registration of charge has not happened. They've created the charge. After creating the charge, they are supposed to register, but which has not happened. So with the concern within the first statutory, look at it. He is using the word first statutory period. This is the reason why I request you to become familiar with this. So the first 30 days are called first statutory period. Now, so they missed that first deadline by law, and default was made known to it by the lending banker with a stern warning to take immediate steps for notification. It is the company, that is the borrower, who has to go for registration. He failed it, and the lender has noticed that within 30 days he has not filed, he has not registered the charge. So therefore, the lender had given a warning to the borrower asking him to go and file it. Now, what he is asking is the latest date within which the company must register the charge with the ROC. This point is important. So as to avoid ad valorem fees. But if we look at it, ad valorem fees will start kicking in after 60 days, because once you miss your 60 days bucket, that is 60 days from the date of creation, then thereafter ad valorem fees is going to come, which is very expensive. It is based on the value. So therefore, the company is asking you, they don't want to, they miss this. If we summarize this one, the company has missed this one, they couldn't do it, and they don't want to pay ad valorem fee. So in between, you got only the second statutory period, which is nothing but another 30 days. But since he has given this date of creation, from the date of creation, it is 60 days. So all that you have to do is, what are the 60 days, how do you count 60 days from February? So March, April. So this is what would be the date that would come into this. But actually, this is what is ICI answer. If you ask me strictly, because since February will not have 30 days, month is different and 60 days are different. So it may get into further days, but let me not confuse you. So it is 2 months is what you take. because 30 days is the first statutory period which you missed it, and you are at the second statutory period. And if you miss this deadline, then you are given another 60 days, but you will have to pay ad valorem fees, which you don't want to pay. Since the company wanted to avoid this and they've already missed this, the only choice for you is do it in this second. That is, register the charge within 17th April. So this is how a question can be asked. Now, further look at it. May 2023 question. City Bakers Limited obtained a term loan of 1 crore from DNB Bank Limited. The loan was granted by the bank by creating a charge on one of its office buildings, and the charge was duly registered within 20 days of it. They have registered the charge from the date of creation. Now, will such registration of charge be deemed to be a notice of charge to any person who wishes to lend money to the company? So, here he is not asking about the timelines, because the company has not only created the charge, as I told you, they have even registered the charge. So once these two are done, then this question has nothing to do with this timelines. So the company has fulfilled its obligations. But he is asking a different question, which is an extended concept over here. So he is asking, what will it be considered as deemed to be a notice of charge, which we will discuss it. Also explain the extension of time limit of its registration with the provision. So what are the extensions that are possible? So therefore, indirectly you have to look at this timetable and you are supposed to write in a summary linking to the practical dates of it. First 30 days normal fees, next further 30 days, that is up to 60 days normal plus additional, and the third slab further 60 days, that is 30 original and then 30 extended plus 60 extended further one. Then you got to pay all three fees: normal fee, additional fee, and ad valorem fee. Now let's look at it. Now under this amended act, what they say is, wherever this is a negligible one, wherever you are paying this ad valorem fees, then your additional fee or advance, that is wherever you are missing the first statutory limit, then you are supposed to make an application and along with the supporting declarations. And the declaration should be saying, because you have delayed it, now because of your delay in registering, that is you have missed the 30 days, was there any damage to the rights of the parties, rights of the creditors? So you got to confirm to the central government, we have delayed in registering, we missed this first 30 days, though there is a delay, but there is no harm done. That is, the rights of the creditors have not adversely been affected. Once you give this declaration, once the central government is confident of it, then they will allow you to go register within the second statutory and third statutory. So this is what are the points on it. Now let's move further. Types of charge. Again here, I'll come back to it. We still not done with this question. There is a concept here which is talking about notice of charge. That too, the deemed notice of charge. So we will discuss it. As of now, I am keeping it on hold because this contains two things. One is a deemed notice concept and second one is a time limit concept. So we are done with half bit of it, and the remaining half we will cover. As and when we cover, I will get back and cover that as well. Now let's move further. What are the types of charges? Which is the basic one? You all must be already aware, so let me take you quickly. Fixed charge is something what you create on a fixed specific asset, and floating charge is something what you create on a floating asset. When you say floating asset, the value of that asset keeps changing. That is why we say the constantly changing asset. Now, example of this are debtors, creditors. Let's look directly at the summary of it. Now, if you look at the differences, what are this is the fixed charge and this is the floating charge. Now, say this table, this column is for fixed charge and the second column is for floating charge. Now, first let us analyze it. The type of property, this fixed charge is always created on identifiable property of it. Whereas these assets are individually identifiable, but these are not capable of individually identifiable. These are at best can be identified through the class they belong. So that is why these are called class of assets. So this is created on class of assets, the value of which constantly keeps changing or fluctuating. Example of it are debtors, stocks. They keep moving, they keep changing. Either it can change from the upper side or it can change from the lower side, but the value of it keep changing. And these stocks, you can't identify them individually, they are better identified as class of assets. But if you take here the buildings, machinery, land, these are not called a group assets, these are individually identifiable property which are covered under fixed charge. And this is the biggest difference between these two. That is, under fixed charge, the company cannot deal with the asset. That is, the company cannot use the asset. Company cannot sell the asset, which are is kept under charge. The company cannot sell. But in this case, the company can even sell the asset. The company can deal. But do they have to take the permission of the lender? No. Even without any obtaining the consent from the charge holder, they can even deal with the asset. So therefore, under floating charge, the risk is very high. Point one, the asset is in the physical custody of the borrower, and if the act is giving him right to the borrower to deal, that is, you can sell the asset without asking this charge holder, then what is the security that the charge holder is having? He don't have the physical custody, and he can't even stop you from selling. Then what happens if he sells after creating and registering the charge? That is what you carry this risk as far as floating charge. So between fixed charge and floating charge, fixed charge is more secured. It offers more security to the lender than the floating charge. So therefore, whenever you want the floating charge to be accepted, the banker would look at your personal credentials. So he will look at your CIBIL rating, he will look at your general credit profile. So, and only when he's satisfied with your personal background and CIBIL score and your general attitude and the profitabilities, he is not going to accept through this floating charge. Between them, the banker is at high risk under floating charge. That is where he has seen all this and he has accepted to this, but now the things are changing. So whenever he gets a threat to it, that is where the banker will immediately convert that floating charge into fixed charge. So conversion of floating charge. So floating charge is converted into fixed charge. We don't convert fixed into floating. That doesn't arise. But if we're converting floating into fixed, why is it doing it? Because the creditor is getting concerned about the security. Because then why is he getting concerned? Because of these reasons. Either the entity is not able to run the business, it is getting into liquidation, they have stopped carrying on the business. All these are the symptoms which creates a kind of the risk to the creditor. So therefore, if these scenarios are there, he don't want to continue with the floating charge. He want to convert them into fixed charge so that his assets are taken care of it. So what could be the causes? One is the liquidation. Second one, they stop doing the business, ceasing to carry on business. Third one, when the debenture holders become suspicious of their security and they started taking steps to enforce their security, to enforce for their security. And then the fourth one, wherever there is a default in payment of the interest or the principal. So when the borrower defaults in the payment of the interest or principal, the lender gets active, the lender gets noticed, he gets cautioned. Then he starts thinking, what happens when he start paying interest or principal? Now is my money safe over there? So once he get that insecured feeling, he simply converts that floating charge into a fixed charge. What happens if he converts into fixed charge? Once he converts into fixed charge, then you cannot sell the asset without his knowledge. So here, without the consent of it, you can't sell. But here, you don't require, even without obtaining, you can sell it. So that is where this concept of conversion from floating charge to fixed charge. The technical name for that is crystallization. So this was an old question. Nowadays he is not asking much. That is why I am not requesting you to take 3 stars or 4 stars to this. But otherwise, old questions, if you take some 5-6 years and ago, it was a standard question on which they used to ask, what do you mean by crystallization and what are all the situations or circumstances when the crystallization happens? When you say crystallization, it is nothing but converting floating into fixed. That is what we mean by crystallization. Why it happens? These are all the reasons. So these are all the circumstances rather. So which would result into my crystallization. Now, this is how we used to ask the question. Explain the concept of charge. You are supposed to write the definition of charge and point out the circumstances where the floating charge is converted into fixed charge. The technical name to that is nothing but your crystallization. So with this, we have covered the second simple difference between fixed charge and the floating charge. Now, let's move on with this certificate of registration. So, in the certificate of registration, like we talked about it earlier, we have seen the diagram. Let me come to it. So, here, where is the certificate of registration coming and who is issuing to whom? It is the ROC who will issue this certificate of registration of charge to the company and the charge holder. Now, when will he issue this? After receiving either CSG1 or CSG9 from the company who is a borrower along with the documents. Once he receives it and is convinced with the authenticity of the documents, then ROC will issue this CSG2 to both the parties, that is the company and the charge holder. Now, let's come here. Let's look at it. What is it trying to cover under this paragraph? Same one. On registration of charge or its modification, RVC shall issue what is called a certificate of registration in CSG2, and he is going to issue this to both the parties, one to the company and other one to the charge holder. Now, what are the consequences? What is the effect of this CSG2? What happens if we get a certificate? What is the power of this CSG2? Whichever the ways you analyze. Once ROC is issuing this certificate, CSG2, it is a conclusive evidence that you have complied with the Act. So, that gives you a conclusive evidence that all the requirements of the Act have been complied with. Now, what happens if I am not registering it? Now, if unless the charge is registered, so the creditor shall not take any charge into account. That is, he won't become the secured creditor. So that is as simple as that. Now, that is this point. Now we'll move on to section 78, registration by the charge holder. Take 3 stars to it. He is asking questions on this. Registration by the charge holder. Now, what is this registration by the charge holder? Let us look at here. Now, to quickly go back and recap, I'll come to this topic, but quickly get hold on what we have been discussing. Now, we started discussing about what is the objective of this chapter at the end of it. So, the objective of this chapter is to protect the security, to protect the asset which is given as a security, and that protection we are giving it to the creditor. So, that is the objective of it. And then we started discussing about what do we mean by a charge, what are the types of charges, whose obligation it is to register the charge, and when they have to do this. Now, to quickly giving a recap of all this. What do you mean by the charge? It's nothing but an interest or lien is created on anything, either it is an asset or a property, and as a security. That asset can be a tangible or intangible, but it may include even your mortgage. That is what we call it as a charge. And then whose obligation it is to register the charge? Once the charge is created, then the company, that is otherwise in our case it is the borrower. Now the borrower, it is the company's obligation to go and register the charge. Which section covers it? Section 77 covers about registering the charge. Now, then we talked about what are all the documents this company may have to file at the time of registering the charge. So the company will be filing either CSG1 or CSG9 along with this other supporting documents like loan agreement, etc. The support proof, the supporting documents to justify that you are the owner of the asset, etc. Once these are given, then RVC is going to issue one certificate which is called CSG2. Now, then we talked about fixed assets and fixed charge and floating charge. Fixed charge is created on fixed assets which are easily identifiable property, and floating charge is created on current assets, that is which are recognized generally as a class of assets. Now under this, the basic difference between them is dealing with the asset. If it is a fixed charge, he cannot deal without the permission of the lender, and if it's a floating charge, yes, he can deal with the asset even without permission of the vendor. And then we talked about crystallization. So when you say crystallization, you are converting floating into fixed. It's not vice versa. It is only converting floating to fixed, because when you have accepted as a floating charge, but now you see some risk in having the control on the security. Therefore, to secure your asset, you want to convert your floating charge into fixed charge, for which the technical name given by the Act is crystallization. Now, and then we come to the current topic. Now, when it is the obligation of the company to register the charge under Section 77, what happens if he's not doing it? So that is when this 78 will come in. Say, and 77 says it is the duty of the company to go and register the charge. But if the company fails, that is why we start with that. Otherwise, the first obligation is always on the company. But what happens if the company fails? Because at the end of it, the company is a borrower, but the security, the objective of it, as we discussed, the lender is want to have more security. So the borrower has nothing to lose, even if he's not registering the charge. So it is in the interest of the charge holder to see that the charge is registered. That is where what happens if the borrower is not doing it. Though we have talked about the timelines, 30 days normal fee, 30 plus 30 additional fee, normal plus additional, and 30 plus 30 plus 60, that is 120 days. You have this all three pieces: normal, additional, and ad valorem. Despite that, what happens if the borrower is not doing, if the company is not doing it? That is what the 78 gives the right to the charge holder, because he want to have a control on it. He don't want to depend. He don't want to have dependencies on the company, because company may not bother. He got his money, so he may not show any interest in registering the charge. So it is the interest of the charge holder to see that the charge is registered. But unfortunately, the Act has given the responsibility to the company to go and register. But the benefit of registration is with the lender, is for the lender. So the benefit is for you, but I have to do it. Now, why will I do? Which will only benefit you. So therefore, in the business, the company may not show much interest. They got their money, they got the loan, so they may not be showing any interest in creating the charge, so in registering the charge. That is why this 78 will come into the picture. So whereby the charge holder wants to get hold of it. Now, look at this, the diagram that is given in the ICI material. This itself summarizes whole concept. It starts with the same thing. Whose obligation it is first to register the charge? It is the company's obligation. So the company which is creating the charge, it is must. That is what they are saying. So it is the obligation of the company creating the charge to register the charge. But the first statutory deadline is 30 days. So they waited for 30 days, but the company is not doing it. They failed to do it within 30 days. But charge holder don't want to keep quiet, because if the charge is not registered, he cannot consider it as a secured loan. So he will be missing the rights on this secured asset. So therefore, if the company fails to do it, the charge holder himself want to do it. That is what we are trying to mention it here. So the charge holder himself may apply to the ROC. Why the charge holder is applying? Because the company failed. So he has an obligation one, but only when one fails, the charge holder comes into picture. Whenever the charge holder is submitting, then what the ROC is going to do is, ROC will issue what you call it as a show cause notice. Now, and the ROC will issue a show cause notice asking him to show cause, because he will issue this show cause notice to the company. So if you look at it, though it is called, is given as a notice, but this notice is nothing but a show cause notice. Then who is giving this show cause notice to whom? ROC is giving this show cause notice to the company, because the charge holder has informed the ROC asking him to register the charge. Since he had asked this ROC to register the charge, ROC is issuing show cause notice to the company, show the cause why I should not go and register. That is why it is called show cause notice. And generally the time period is 14 days for it. Now, if any objection is received, that is, it is the charge holder who has gone to this ROC saying that the company I have given loan to one company, imagine there is a borrower. Now, the charge holder has gone to the ROC claiming that he has already lent the loan to this company, and the company is supposed to come and register, but they are not doing it. So therefore he says, now I want to register the charge on this proper asset. Then what ROC want to do? He want to inquire with this company, but his inquiry comes through by issuing show cause notice. So whenever charge holder is going, now the ROC is issuing the company what is called show cause notice, asking him show cause why the charge should not be registered, because he says he has given loan to you. Now tell me the reason why I should not register. And generally they give 14 days time for you to respond. That is for the company to respond. Now what happens if the company responds to this show cause notice saying that no, I have not taken the loan. He is giving all false information to you, and the deal has been cancelled. We have refunded the amount. He may have his own reasons. So he is having objections here. So he is having objections, saying no, don't register. I have objections. Then if the company registers, if they give the sufficient reason to it, then why it should not be? Then the registrar shall not allow the registration. So if the company is able to convince the ROC, there is no such borrower and he is giving all false information, then the ROC will not register it. So he will not allow the registration of charges to the charge holder. That happens when the company's reply. So here the company is replying. They are replying to what? They are replying to show cause notice. So they are replying. With the reply, what are they trying to reply? They have their objections. No, we don't want this to. So they have raised certain objections saying, no, don't register. And if the ROC is convinced with them, he will not register the charge. Now, but what happens? The other reason. He has issued the show cause notice, but he waited for 14 days and no objection has been received. Now that is, the company remained silent. The ROC had sent a show cause notice, but company didn't respond. Then how long ROC will wait expecting a response? He will wait only for 14 days. If the 14 days the reply is not coming, ROC will go and register the charge. That's all. Like you can see here, he will register the charge. He will only wait for 14 days. If no objections are received within the 14 days, he will go and register the charge. So this concept is what we call it as registration by charge holder. Now let's take a summary. Now, creation of a charge and registration of charge, which comes first? So first comes the creation of charge, and whatever the charge you are creating, you go and register the charge. Now then who has to register the charge? It is the borrower. That is, it is the company which has to go and register the charge with the ROC. Within what time? There are 3 slabs, 30 days, then 60 days, and then 120 days. So, and first 30 days, it is the normal fees, and next 30 days, that is additional 30 days, that is 60 days from the date of creation, the second slab, normal fee plus additional fee. Even that failed, then you are given further 60 days where 3 types of fees have to be paid: normal fees, additional fees, and ad valorem fees. Now once you pay the amount, ROC will look at 2 documents, the CHG1 or CHG9 what you are filing with him, along with the other documents. If he is convinced, then he is going to issue one certificate which is called CHG2, Certificate of Registration of Charges. He will give one copy to both the parties. In that scenario, the matter ends and there is no need for section 78, because that registration process has been completed. The 78 will enter when the 77 is not complied with. That is, the company has not registered. They've borrowed the money, but they have not registered. But since it is the interest of the charge holder that is to be registered, that is what we are talking. So when the company fails within the 30 days, then the charge holder is going to the ROC, asking him to register the charge. Then ROC is giving a show cause notice to the company saying, so and so lender has come to me. Now he says that you have borrowed the money from him and you've agreed to give your asset as a charge, as a security, creating the charge. Now, do I go and block that asset as a security for him? Then the company is given 14 days time to respond to that show cause notice. If the company responds saying, no, there is a communication gap, now we have not borrowed anything, or the deal got cancelled, or I have repaid the money, don't register. He is giving you false information. And if the ROC is convinced with the company's reply, then he will not register the charge. But after receiving the show cause notice, if the company is not responding to the company, then ROC has every reason to believe you don't have an objection. Because since you didn't show, or you failed to show cause why a charge is not to be registered, you will go ahead and register the charge. So the waiting time to respond for this notice is 14 days, show cause notice. Now, let us look at this question here, now which is asked in May 2022. Latest questions, as I said in this chapter, all questions are straightforward. Unlike your management topic and all that, where you talk about proxies and questions are slightly interpretative or even auditors, this chapter is a very simple one. There, the questions are a bit technical and the questions are little analytical, but here it's all very simple. Now, let us read this May 2022 question. It is given for 4 marks. Now, thus, Beauty Limited obtained a working capital loan from a nationalized bank against hypothecation of stocks. So they have hypothecated their stocks and they have borrowed money. Now, an instrument creating charge was duly signed by the company. So, creation of charge was duly signed by company and the bank. As I said, creating the charge is different, registering the charge is different. That is what I have told you in the beginning. Creating the charge, there are only two parties involved, company and the bank. That task one is done. Now the company is not willing to register the charge. Be familiar with this. So here it is creating the charge, here it is registering the charge. Step 1 is done. Step 2 is not done. Company is not willing here. So register the charge with the ROC. So in the light of this, what a charge holder can do. Now he is asking, is there any provision empowering this nationalized bank, who is nothing but a charge holder, to get the charge registered? Can he register? The answer is yes, he can register. But only thing is, whenever he submits the same forms, CHG1 or CHG9 to the ROC, before registering, ROC will issue one show cause notice. If the company responds, if the ROC is convinced, he will not go ahead with the registration. Otherwise, he will register the charge and issue the same CHG2 to each of these parties. So, coming back to this, are there any provisions allowing this charge holder to get the charges registered? Yes. So he can do it, and then you are going to describe that describe that process. Then, when can the registrar refuse to register? When the RVC will refuse to register the charge in this present scenario, if the company submits their objections. If the company submits their objections to the show cause notice within 14 days, then RVC will refuse to register because he is convinced that the company is correct and the lender is misleading him. So this is how. There is nothing. It's all a straightforward question. Just that you need to present the question in a proper format, and for which you will get 4 marks. It's a simple topic. Now, let's move on with this. Now, all these concepts are covered. Now, then the date of notice. Now, this is again the most very, very small one liner, but he is asking section 80. What they say is, once the charge is registered with the ROC, every borrower from whoever is purchasing the property from the company is deemed to have been issued this notice. Now, before this, I will just explain what is this deemed notice concept, why is it relevant. Look at it from the background. Now, there is a borrower whom we are calling it as a company. Now, he borrowed the money from the lender. Now, you imagine any bank, whichever the bank you are talking about, American bank, any bank. So, he is the lender and he is the borrower. Now, he has given him one security, that is, he has given his building, and in return, because he has given a security, the bank has given loan to him. Now, till here it is fine. They have entered into, so this process is what we call it as a creation of charge. Till here, they enter into loan agreement, including do's and don'ts against this terms and conditions. Then this step, once it is done, this is what we call it like a creating a charge. Creating a charge. After this, the company, the borrower, is supposed to go to the ROC and register the charge. This is the second step. He is supposed to register the charge. But now imagine a scenario. Now he has given it, first step is done. Now since he will here this entire concept is still the asset, the secured asset is under his custody. Now imagine he sold by creating fake documents or whatever the fraudulent ways, he sold to another X. Now this building, this B is selling this building to X. So X is the buyer and B is the seller. This is happening after giving it as a security to the bank, but this guy is a fraud. He has gave this asset as a security to the bank, and he is also so he sold this asset to the X. X, an innocent guy. Now he is not aware of all this. So he bought the property. Now, once he is buying the property, because he is unaware of all this concept of registration, all this. So because he is the owner, he is having some documents. He has created some forged documents. So he sold the asset. Now he got his money. He took one-time money, because whenever you give it, he will give you the sale consideration, nothing but the money. So the borrower, the fraudster here, he got the money in the form of loan from the bank. He got the sale proceeds. He took both of it and ran away. Now, when X goes to this building to take the physical possession, bank will come and stop him. He says, no, this asset is mine. There is a charge created. But he says, no, there is a sale agreement, because when he entered it, he has entered into sale agreement. Here has entered into loan agreement with the bank, and he has entered into sale agreement with this and sold it. Now, these two people are fighting each other. In this scenario, these two people are fighting. He has taken the money from both the parties and ran away. Now the bank and the borrower, the buyer, are fighting for this taking the possession of the building. So to prevent this kind of cases, what this concept says is, once the charge is registered, not once the charge is created, once the charge is registered, then it is assumed that every person dealing with the company, that is, every borrower, is informed of it that the asset is not a freehold asset. And then, despite registering the charge, if he still buys the property, he will not get any right, because it is once you register the charge, the portal, the ROC is going to put all this information in the MCA portal, which are available for inspection for anybody. You have to pay it. So, like whenever you buy a house, you have to do your own due diligence. Here also, the buyer ideally should have gone to the MCA portal, should check with this. Now, is this asset a freehold asset, or is it a charged asset? If it is a freehold asset, you can always buy. But if it is a charged asset, then only bank will have the right on it. You will never get the right. Then how will I know that this asset is a freehold or charged asset? Government is giving you this facility. Go to this MCA website, type CIN of the company, that is this company's CIN, and all the charges will get displayed over here. Now you don't want to do this task, because the government has provided you this facility. So before buying, the government is saying, you go and check all this. You go and check in the MCA portal, which are the building you want to do it. By any chance, has he given it as a security? Now, you don't do it, and you still get into this kind of frauds and become a victim. You paid the money, government is not going to help you. So that is why they are saying, once the charge is registered, because the government has put it in for a public inspection, all these documents and the complete details, the government is very clear. Once the charge is registered, every borrower is informed of it. So meaning, come back to it. If the borrower is selling this property after the registration, you would have paid the money. Even if you pay the money, the buyer will never get the hold on the property. Then it is the banker. But imagine if he is an innocent guy. Now he is not aware of all these legal documents. He thought the building is coming at a reasonable price. He bought it. But ignorance of law is no excuse. So therefore, that is where this concept of notice would come in. Coming back to this concept now, what all that they're saying is, once, now look at it, where any charge on any property is registered, that is, once the charge is registered, then any person acquiring such property shall be deemed to have the notice of the charge. So it is assumed that the borrower is already aware that this asset is given to it, and he is still buying to he is still planning to buy it at his own risk. So then, if at all the bank claims this building, bank only will get the right. You will not get the right. Now, from exam perspective, from which day the deemed notice would come into picture? Now, why do we call it as a deemed notice? Is it that the ROC or the buyer is giving any notice to him or the charge holder? Is anybody giving him a notice saying, no, you can't buy this, it's already secured? Nobody is giving. Once it is registered, it is assumed, it is deemed that you have been informed of it. So that is why we call it as a deemed notice. But the deemed notice would come into effect from what date? Now, the deemed notice would come into effect from the date of registration. Now, take 3 stars to this point. He is asking this in MCQs. From what date the deemed notice would come into picture? Look at this MCQ, which is given in ICI material. Any person acquiring property on which charge is registered under section 77 shall be deemed to have the notice of it from what date? So that is what he is saying. You don't have a doubt on is it a deemed notice? It's a deemed asset. But from what date? So if you look at it, it is very clear. It's simple. It is deemed to have been served the notice from the date of registration. So this will be the answer. Not 30 days of the charge, not when you make an application to them, not the date of acquiring property, but the date of registration. So, once the property is registered, from the date of registration, it becomes deemed notice. That is what this is talking about. Now, let us look at this question. This question is a repeat question. He is asking couple of times the same question just by changing names of the parties here and there. Now, what is he saying? Mr. Antriksh entered into an agreement for purchasing a commercial property. So he want to buy the property and belonging to NRT. So NRT for us, NRT is the seller and Antriksh is the buyer. So he want to buy it from him. At the time of registration, Antriksh comes to know that is about the property and he went to the property department to register. Then he comes to know that the title deeds of the company is not free. Not free means it is not a freehold property. That is, it is a charged hold. It is a charged asset. And the company, that is this NRT Limited, expresses its inability to get the title deed transferred in the name of Antriksh. He bought the property. They have taken the money. After taking the money, they are saying, we can't help you. Now, because the property department is not registering, now the company says, we are helpless. We can't do anything. Now, then on top of it, this company is giving an advice now. He should have known that this is already charges created. He must be aware of it. But they are the people who are selling it. Now, after taking the money, sale consideration, they themselves are giving lectures to this Antriksh, saying you should be knowing that you shouldn't buy from me. Now, why did you buy? So, now that is where he is asking, can a company talk like that? Now, because they have taken the money, they are the people who have sold it. Now, they themselves are come back and arguing, saying that you shouldn't have bought from me. But still, NRT is correct because of the concept of deemed notice, which is covered in section 80. So, if you look at it, this concept hardly one line, but it's being asked for MCQs and it is also being asked for your 4 marks or 5 marks case study. So, once the charge is registered, it is deemed that a notice has been served to every person, whoever is acquiring the property, that this is a charged asset and you should refrain from buying the asset. From what date that notice would come into picture? From the date of registration. Now, with that, that question comes into closure. Now comes the modification of charge. Now we are almost coming to the closure of this chapter. There are two big topics that we need to discuss. One is a modification and second one is satisfaction. Once these two are done, then there are certain miscellaneous chapter topics like where do we keep it and what type of documents have to be kept and all. The chapter will get over. So kindly concentrate. Now, modification. What do we say modification? Whatever the loan agreement that you have entered, this a company has entered into a loan agreement, they have created the charge and they have even registered the charge. But after registering the charge, what happens if there are changes? That is, if there are any variations in the terms of the agreement, rate of interest, mutual agreement, either many mutual agreement or by operation. Whatever the reason, there is a change in the terms of agreement. Then that scenario is what is called modification. And any modification, what the act says is it is very simple. Whatever the sections or provisions of section 77, they shall apply to modification as well. Meaning, you've already registered the charge. After registering the charge, there are some changes to the terms of the engagement. Then it's your duty to go back and communicate to ROC one more time. So you must file CHG 1 and CHG 7 one more time with the details and confirm to him. So the details, whatever the modification that is happening, you must go and communicate to ROC. So whatever are section 77, they are equally applicable to modification. So indirectly, whenever there are changes in terms, who has got now obligation to go and communicate to ROC? Same borrower, that is the company only will have this obligation. And once you communicate about these modifications, then ROCV is going to give you one certificate which is called a certificate of modification of charge, because he has already given you certification of registration of charge. But now that you have modified, like how when you are given original certificate, you misplace it. Now again you apply for a duplicate, they will mark it as a duplicate and give it to you. So here, first time he has given a certificate of registration of charge. After that you change the terms. Now ROC want to modify the terms in his records. So what will he do? He is going to give you what is called certificate of modification of charge. But who has to do it? What are the timelines? Everything section 77 will follow. So it is as good as whatever the reasons that are, whatever the provisions that are applicable to registration, same are the provisions that are applicable to modification. Now, what are all the examples of modification? Anything. Change can be anywhere. Either there is a variation in the terms and conditions, or there is a change in the limits that are given to you, the limit of loan, working capital limits, whatever it is. Or it can be a surrendering of pari passu charge, or it can be a change of rate of interest. But if the rate of interest is on account of bank rate, then it is not a modification. But other than bank rate, genuinely if there is a change in the rate of interest, it is called as a modification. And any change in the repayment schedule, any partial release of the charge created on it. So, any change in your original terms and conditions to the loan agreement, then it is the duty of the borrower to go and register with the ROC for modification. So, that is what is this concept of modification. In this, just take 1 star to this. Only once he had asked, any change in the rate of interest, if it is on account of bank rate, it is not a modification, you don't have to file. But other than the bank rate, mutually you have agreed that the rate of interest either to be lowered or increased, then it will be treated as a modification. But the change in the overall interest rate is on account of bank rate, which goes normally by the RBI's announcement of credit policies, etc., then it is not a modification, because these bank rates, you are not the only one who is getting affected. Almost all borrowers are getting affected. So there is no need for everybody modifying their charge. But other than that, mutually you have agreed to either lower the interest or higher the interest, then it will be called. But then only you are getting that affected. It is not this change in mutual change, whatever you have agreed, is not impacting all others. So therefore, any change in the rate of interest is a modification. But if that rate in the change in the rate of interest is on account of bank rate, then it is not a modification. And again conclude, what happens if it is a modification? Nothing. You need to do the same 77. That is, the company will file with ROC. If ROC is convinced, he will give you what is called certificate of modification of charge. Initially, he has given you certificate of creation of charge. Now he will give you certificate of modification of charge. So with this, we have covered first, what do you mean by charge? What are the types of charges? Fixed charge and the floating charge. Then whose obligation it is to register the charge? 77. Is it the company or the charge holder? It is basically the company. But what happens if the company is not registering? If the company is not registering, charge holder can always go and do it. But only thing is, ROC is going to issue one show cause notice. If that show cause notice is answered properly by the company, if they share any objections, then ROC will not register the charge. But if they no response to that, then ROC will simply go and register the charge. And then we talk about the timelines. To repeat it, 3 timelines: 30 days normal fee, 60 days normal fee plus additional fee, and 120 days it is normal plus additional plus ad valorem fees. Now, then come to this last topic of it. There are few topics, but they are all generally miscellaneous. This is from concept perspective. This is almost, you can say, the left out the major topic that is remaining. Now, here it talks about satisfaction of charge. That is, they are given the procedure, but let us try to look at through the diagram. Now, satisfaction of charge is nothing but the company has borrowed from the banker. Now, maybe that is for 3 years installments, monthly installment of 3 years or something. 3 years are over. The company has repaid the total amount. Now, since they have repaid the total amount, they want to get back this asset. They want to convert that charged asset into freehold asset. Otherwise, since that charge is already registered, now it is there in the ROC database. Now, in the ROC data bank, that asset is being shown as asset charged as a security to some lender. So you will not be able to, nobody will come and buy your property because everybody says you already given it as a security to them. But the company would have paid the total amount. But if you have paid the total amount, then whatever the entries the ROC has entered at the time of registering the charge, now it is your duty to see that the entries in the ROC database is removed. But that concept of removal and company cannot simply go and erase the data from the ROC database. Since it is the ROC's database, ROC only can delete it. But for that, ROC need to be communicated. Now, I borrowed this money 10 years ago. 10 years I have repaid the loan. Now I have paid all the dues in it. Now I want my asset back. Now I want that line to be removed. Because the company's problem is, as long as the registration is in live, that is in the MCA portal, it is registered as a charged asset, nobody is going to buy. So that is where the satisfaction of the charge would come into picture. Now you look at it. So in this case, the company want full payment of the debts, whatever they have borrowed. The company will file a document, what do you call as CHG4. So the company is filing this document with the ROC. So the company is filing this one document CHG4 with the ROC. Time limit is 30 days. Now, then whenever the company is telling ROC, I have repaid this amount and now you delete the entries. But ROC will not straight away believe you because he would be responsible to the charge holder. So therefore, ROC is going to ask the charge holder, has he really paid you the money? Now, or that is what we learn it technically, the ROC is going to issue show cause notice to the charge holder. Show cause why I should not delete it. That is why it is called a show cause notice. Then how many days are given to the charge holder to respond? 14 days. So in the 14 days, if the charge holder goes back and tell ROC, no, he has not paid me money, still some money is due, then ROC will not delete the entry. But if he don't respond within that 14 days, then ROC believes that, he assumes that you have no objection in removing and he will go and delete the line. And what he will do as a, since he had issued earlier the certificate of registration, now he is going to issue one certificate called CHG5. That is nothing but certificate of registration of satisfaction of charge. He will issue. Whom all he will issue this CHG5? Again to both the parties. One to the company and one to the charge holder. So this is, what is this concept? I repeat it. Say, on full repayment of the loan, because this comes after full repayment of the loan. Now the borrower has repaid the total amount, then his obligation is to go and file with the ROC a document called CHG4. Now once you file this within 30 days, then ROC will straight away not believe you and remove the data. Maybe the company can be bluffing. So the company may be bluffing. So to make sure that the facts are correct, the details are correct, the ROC is going to issue show cause notice to the charge holder, giving him 14 days time, asking him, show cause why I should not remove this. Then he will wait for 14 days. If no cause is given, if no cause is shown, then ROC is going to issue one certificate which is called CHG5 and he will delete the entries in his database. That is when the charged asset will again become freehold asset. Now this CHG5 is given to both the parties, one to the company and one to the charge holder. And once this company is getting this CHG5, all formalities are done and their asset has become freehold asset, meaning the company can simply deal the asset. It has become their asset, so therefore whenever they want to sell, they can sell it. So it's indirectly, it is a legal conclusion of this entire concept of company borrowing the money and they giving the charge, but because the company has paid the total money, now the charge is also, they don't want the charge still to be on with this. So that is when the satisfaction of the charge would come into picture. Now, That is the concept, what you understand from this. So again, I'll quickly give a glance to it and then take you through the theoretical part. On full repayment, so that prefix is important. On full repayment, the company will communicate to ROC through CHG4 saying that I have repaid the money. Then ROC, instead of blindly believing you, he is going to issue one show cause notice to the charge holder. Show cause why I should not delete this entry. Now, if no notice, no objection is received for 14 days, then ROC will go and delete the line and issue one certificate, what is called Certificate of Registration of Satisfaction of Charge. That is, the form number is CHG5, and ROC will again issue this form to both the parties, one to the company and one to the charge holder. So this is, with this, the line has been closed and everything, all formalities are done. Now, let us look at it. So, this satisfaction of the charge, there are two sections that are involved. One is section 82 and second one is section 83. What is the difference? In section 82 is precisely what we talked. So, there is an intimation by the company to the ROC. This is what it is. So, whatever we have covered here, this is nothing but our section 82. So, this diagram, the procedure, company communicating to ROC. So, there is an intimation by the company to whom? To the ROC. That is what you see here. Company is informing ROC, and intimation, then how do you inform him? Through CHG4 within 30 days that the payment has been made, paid it. And then ROC is going to issue one show cause notice of 14 days. And if no response is given, if no cause is shown, that's what he's saying. If no cause is shown within that 14 days, ROC will issue what is called Certificate of Registration of Satisfaction of Charges. So, and the form of this is CHG5. So, with this, the entire concept is clear. But at times, again, I'm repeating it. Take 1 star to this, because of late he started asking questions on this. That is, when the company informs the ROC, the process is simple. It's a very logical one. Everybody is aware. What happens? The company has repaid the money and the banker is okay with that. He has given back all the documents, but ROC database is still showing because they didn't inform ROC. Company is happy because they got their documents, whatever the property documents the bank has given back to them. And so the agreement is clear between the bank and the company. But ROC books are still lying. So many times the companies don't communicate to the ROC. They don't follow 82. So actually the loan is closed, but in the ROC books it is appearing as if the loan is not settled. So that kind of gaps, then what will happen? That is what you are discussing. When there is no intimation by the company to the ROC, but the fact is the company has already made the total repayment, but they have not communicated. What ROC can do? Can he act on his own and delete the entry? Because that his database is the owner of it. So he don't want to have any errors in his database. So therefore, ROC want to know, ROC want to have the right to delete the entry even if the company is not communicating, provided he is satisfied that yes, the payment has been made and the company is negligent in communicating. Is he having the right to delete on his own? That is what section 83 talks about. The answer is yes, ROC is entitled. So ROC can do it. So whenever he has a reason to believe, that is, on coming to know that payment is already made, then he is going to delete that entries and he is going to communicate to both the parties. So he himself, that is voluntarily, he can issue it. So this CHG5, there are two ways why the ROC will give. One is when the company is communicating. That is what we talked about 82. Even when the company is not communicating, if the ROC comes to know through some other sources the payment has been settled, but nobody is coming and settling this amount, ROC is entitled because he don't want his database to be wrong. So he has been authorized to delete the lines and issue the CHG5 to both the parties and close the matter. Now, to emphasize that, look at this ICI question on this particular concept. Ranjit acquired a property from PQR Limited, which was mortgaged to Pyramid Bank. So now he is using the word mortgage. Now I will ask you a question. Whether the charge includes mortgage? The answer is yes. Mortgage is included. But what is not included? If it was a pledge, then we wouldn't have included. But mortgage and hypothecation, the answer is yes. Now, he settled the dues. Look at this point. He has already settled the dues to the bank in full, and the same was registered with the sub-register office, that is the property registration office. That's all done. Mortgage has been settled, that is closed. So, but neither the company nor the banker, that is, neither the company nor the charge holder filed this particulars for satisfaction of charge. Nobody informed ROC. So, but the payment has been settled, but nobody communicated to him. Now he is asking, can Ranjit approach the registrar and seek any relief in this? But who is Ranjit here? Now, who is borrowed what? If you look at it through a diagram form of it, look at it. There is a PQR Limited. That is what we call company. And for us, he is the borrower. And he borrowed from whom? So, he borrowed from this Pyramid Bank. He borrowed the money from Pyramid Bank. So these two are the borrowers. Then who is this Ranjit? Ranjit is a third party. He is not a party to it. He is the lender, or whom we call charge holder, and he is the one. So it's all between them. But Ranjit is the one who bought the property from the company. Now why did he bought the property? Because he has seen from the property registration department that the loan that they have taken is already squared off, that is the loan is repaid, and they have even the entries in the sub-register office has been deleted. But along with the sub-register office, the ROC database still shows that this PQR is a borrower and this Pyramid Bank is a lender, because nobody has communicated to ROC. Now, then what happens then? Why Ranjit is going to the ROC? What happens for Ranjit is, say he bought the property, but as long as the details are there in the ROC records, he cannot sell that asset. He can never become the owner of it. So, because the details are already there, that this asset is not a freehold asset, this asset is given as a security to it. So, therefore, what it says is, it is Ranjit now wants this ROC to delete the line. I have seen there, they've already repaid the amount, and the bank has given a no due certificate, and even the sub-register office they have deleted, but they forgot to tell you. So who has gone to ROC? If the company goes, it becomes section 82. But company didn't go. But the buyer from that is a third party, to put it in a simple student's language. He is a third party. He went to the ROC asking the ROC, this is what has happened. This company has already repaid them, and they've already deregistered this deal in the sub-register office. Now he is asking them, you also delete this entry. Now that is what he is asking. Now can the registrar do it? Now can the registrar remove this line? That is where section 83 comes in. Yes, the registrar can do it. But what he will do, he will, whatever the data that Ranjit has given as a proof of it, he will verify. Now, if he is convinced, then he will straight away remove the line. He will delete the line and he will issue one CIG file to both the parties and close. So, the answer to it, can a third party communicate to ROC? Can he approach to ROC? The answer is yes, he can approach to it. And then what is the relief they can do it? ROC is going to delete the lines, though he has not received any communication, because this is covered under 83, section 83, which we are talking about it. So ROC has the power. He can delete it. He need not wait for the company to communicate. So with this, that point is also covered. Then we are almost at the end of it. Register of charges. It's a small, negligible and easily manageable concept. Register of charges. See, there are two sections that deal with that. So one is section 81 and second one is section 85. Now section 81, it talks about the registers to be maintained by the ROC. ROC also maintains one set of documents and company also maintains one set of documents. Now what is the difference? That is what we are trying to see. Mostly all will be clear with this concept, because since now we are going through this one shot revision. I'm not really getting into some of the base details into a few concepts. I'm assuming that you're already familiar with. Now, so the register maintained by the ROC, which is covered here. Now, ROC maintains the data only in a digital form, that is in the entire MCA portal. And the data which is keeping it in the MCA portal is open for inspection. Now, who can see this data? Any person can see the data. Only thing is you may have to pay some nominal amount, but anybody can see the data. So, the question here is, what is the register that ROC is keeping? It is nothing but MCA portal. So all the details that is keeping it are there in the MCA portal, which is open for inspection. So this is simple. So as a summary, where is the data? What are the registers maintained by the ROC? Nothing. It's all digital format. So it's all there in the MCA portal. Then what about the company? Now, will the company maintain parallel registers? Yes. Now, where are they supposed to keep? Can they keep it like him in the MCA portal? No. MCA portal, ROC is the owner. It is the government website. He is the government authority. But you are a private person. So, whatever the charges you are registering or you are creating, company should maintain the register, and such register should be kept at the registered office. Then, what will be there in the register, which is maintained by the company? Now, name of the charge holder, basic details, and details of the properties, date of creation and date of modification in case there are anything. Now, then whatever the register you are entering here, this is such a crucial register, that is every entry in that will have to be authenticated by the director. So every entry that is entered into the register will be validated, will be verified by the director. So that is the importance of this register. What does it mean? Now, I'll put this in a different way for your understanding. Say a company, that is the borrower, has borrowed from a lender, and after this they went to the ROC and registered the charge. So here they have created the charge and here they have registered the charge. Now some third person, like say some P, now he is a third party, he want to buy the property of this company. Now, whenever he want to buy the property, there are two sources for him to verify whether the asset he want to buy is a freehold asset or a charged asset. Option 1, he can go to ROC and look at the MCA portal. And this is very simple, just that you have to type the SIN number of this company. All loans, secured loans will come up. Or alternate 2, you can go walk into the company and look at the register, what they are maintaining. So it is the choice of the P to check whether MCA database or this, because both of them are maintaining the database. So but if you ask me as a third party, which is more authentic, obviously the government data, because the company can always manipulate their records. But this is also one of the source for the third person to go and check. In reality, people would check both the sources. They first come to the company, they make sure that the asset they want to buy is not given as a security, and then they go back to the ROC, and in the MCA portal through the SIN number, they verify the register. So, but it is up to the borrower. So, this is source number 1, this is source number 2, because both of them are supposed to maintain. This is what we are talking about, section 81, where ROC is maintaining the data, and this is what we are talking about, section 85. So that is, the company is also maintaining, ROC is also maintaining, both of the people are maintaining. That is what he is saying. Now comes the question. Now, for the registers that are maintained by the company, how long they have to maintain? Like in accounts of the company's chapter, you learn, generally accounting records and all will have to be kept for 8 years. So here also same, any instrument of charge, meaning your CHG1, CHG9, CHG2, CHG5, CHG4, any of these are called instrument of charges. These documents have to be kept for 8 years. So if you are keeping it for 8 years, it is sufficient. But the register of charges, what here we are talking about, the register, that register has to be maintained permanently. So register should be maintained permanently, whereas the instrument of charge, it is sufficient enough if they keep it for 8 years. Now, then who can inspect? Now, inspection. Again, we are talking about the registers maintained by the company. Now, who can inspect? First of all, when they can inspect? During business hours. During business hours, they can inspect. And who all can inspect? Either the member or the creditor. They can verify without the fees because they both are the parties to it. So, any shareholder or a creditor, that is a lender, charge holder, they can verify. They can come to the company and verify. They don't have to pay any fees. But other than them, any third party want to come, like in the diagram I was talking about, he want to go to the company and check the records under 85. He can do it, but if he want to verify, he has to pay the fees. So with fees and without fees. Who don't have to pay the fees? Members and creditors don't have to pay the fees. Take 3 stars to it, mark it as MCQ. I'll show you why. Look at here. Who cannot inspect the registers and instrument of charges during business hours? This also is again business hours without payment of fees. So unless you pay, who cannot inspect? So indirectly, who has to make the payment? That is what he is asking. So who has to make the payment? Whether member or creditor has to make the payment? The answer is no. They need not make the payment. Then who will have to make the payment? Any other person. Third party has to make the payment. So look at it. Who cannot inspect the register without making the payment? Then persons other than the members and the creditors, because for these two categories it is free of cost. But if you are not a member and not a creditor, you can inspect, but you have to pay the money. So by paying money, it is permitted, you can still inspect. So this point, keeping that, mark it as 3 stars and be ready with that. And then what happens if I don't register? So these penalties would come into the picture. That is, company will be levied 1 lakh to 10 lakhs and defaulting officers will be levied with this penalty if they fail to register the charge after creating the charge. Apart from that, the payment shall become immediately payable and no remedies, because you are not registered, government is not going to help you. Plus no lien on the title deeds to the creditor. More than this penalties, that's all. But with this amendment, now all this may not be really relevant, because if you submit any false information at the time of, or suppresses any material at the time of registering the charge, then 447 would come in. You know that 447 is a common section which is for all types of frauds. So 447 would come in if you submit any false information. Then apart from that, then really the last topic, rectification by central government and registration of charge. That is, you are supposed to register, but you have not registered, and then you make an application to the central government. If the central government is convinced that yes, you have omitted, but that omission was only accidental or due to inadvertence, that is, you never had any manipulative or you never had any fraudulent intentions to manipulate. So if the central government is convinced it was either accidental or inadvertent, then, or for any other reason, then the central government can order this ROC to register the charge. So that is what he is saying. So can order any rectifications, whether it is a registration, modification, anything, it is the central government which can order if they believe certain information has been omitted, but that omission was on account of not a willful one. It was either accidental or inadvertent or for any other reason, but there is no damage to it. Then central government can order to rectify this registration details with the registrar. That is this point. So with that, we complete our discussion. But before I close the class, let's look at the forms, the summary of it. Look at it first. Now, CSG1 or CSG9. Now, who would be filing the CSG1 or CSG9? It is either the company. The first is, it is the company who has to file. If the company fails, the charge holder can file. But first obligation is on the company. Company to ROC. What do they file? That is, what is this? Either for registration or modification. Both the provisions are same. Then once the ROC is convinced with the data, then ROC will give it to the company and the charge holder, this CSG2 or CSG3 for modification and all. And then intimation of satisfaction of charge. That is, on full payment of it, again the company will go back. So it is again the company comes first and charge holder comes next. the company will go back to the ROC through and file one CHG4 saying I've already repaid the amount. If ROC is convinced, then ROC will issue to the charge holder this form, company and the charge holder, this CHG file, because it is like certificate of satisfaction of charge. And then in case any receiver is appointed, the company will communicate to ROC through CHG6. That is an administrative provision. And the register of charges to be maintained by the company, because ROC also maintains. But what ROC maintains is what is placed in MCA portal. So that we don't talk about much about it. But whatever the register the company has to maintain, they must maintain the format of CHG7. So CHG1, CHG9, CHG2, CHG3, 4, 5, 6 and 7. Just take a screenshot of it and keep it. Maybe probably for CMA students, this form number can come in your MCQs. Even for CA students, he may ask you what is the form number to be filed. So with this, we conclude our discussion on this chapter. I'll give a quick recap of the entire topic and then we will conclude it. We started with what do we mean by charge. It is nothing but creating an interest. I'll give a quick 10-minute wrap up of all this. What do you mean by charge? And it is being discussed in section 260. Creating any interest or lien on any property as a security which will include mortgage. So then among these three general types of securities, where this chapter is applicable, where the chapter is not applicable, this is applicable for hypothecation, this is applicable for mortgage, but for pledge it is not applicable. And then once charge is defined, then who has to register the charge? It is the company who is creating the charge. It is their obligation to register the charge. What charges they have to register? Is it only the loans taken by giving Indian property and all? Nothing. Once you are an Indian company, your global transactions of security, you have to come and register with this Indian ROC. So you have to do it. Then what happens if the company fails? If the company fails to register, then the charge holder can go to the ROC and register. And then ROC will give a show cause notice to the company why I should not register the charge. If the company is able to give any objections, then the ROC will not register, or else he will register the charge. So first creation of charge, first by the company and then by the charge holder if the company fails it. And then on full payment of this money, then company will go back to the ROC and say I have paid the total money, and take the CHG4 with all the details and close the case. Then if ROC is convinced, he will issue what is called CHG5, certificate of satisfaction of charge. With that, the matter ends. In between, we talk about what are all the types of charges, what are the timelines of the charges. So types of charges, fixed charge and floating charge. Which is more secured? Fixed charge is more secured and floating charge is risky for the lender. That is wherever he feels threatened, wherever he feels the risk is, the security is loosening, that is when he will convert that floating charge into fixed charge. And for converting floating into fixed is what we call crystallization. Now the timelines as the last one, and we'll discuss this and close. So there are three timelines. First slab is up to 30 days. Second slab is up to 60 days. Third one is 120 days. And the types of the fees you have to pay: first slab normal fee, second one normal plus additional, third one normal, additional and ad valorem. So these are the base details that we need to remember, and we have covered almost all the questions that are relevant at the current times of it. And again, I go back and take you through this. See, the general weightage is 5 marks, and almost every attempt he will keep asking, but this November attempt he had missed in asking. So wherever he's like even in the November 22 also he didn't ask the question, November 23 also he didn't ask the question. But otherwise you don't see too much of a gap between the attempts whereby he is silent on this chapter. So he will continue to ask. So keeping that point in mind, for this May 2024, make sure that you will be getting a question either for 4 marks or 5 marks. So as we have discussed, it's a very simple chapter. Just go through the examples that we have given and go through this case studies that we have discussed here, and be on top of this important points that we have taken. The 5 marks are yours. So with this, I will conclude this class for now and wish you all the best. Thank you.